Okay, good morning. It's Wednesday the 12th of July. It's getting the briefing underway and just jumping straight into the news, and what we'll try and do is talk about some of the key stories that people are looking at this morning, and then we'll look back at the charts to kind of see the ramification it's had on market prices and what it might mean going forward. But in terms of the actual close that we had on Wall Street yesterday, despite the very quick downward move we had on the back of Trump Jr., which we'll talk about a little bit more in a second, the market actually managed to really fully recover by the time we got to the market close. So the aggressiveness of that move was countered pretty quickly. The S&P basically finished pretty flat. The Nasdaq was up slightly. The Dow was exactly flat for the session. But moving straight on to things and looking at Trump Jr., welcomed offer of Russian help to damage Hillary Clinton. This is obviously the story which broke late yesterday afternoon. He quoted in his email chain, which he published via none other than Twitter, saying, "I love it." He responded when told Moscow lawyer had detrimental material on Hillary Clinton. Problem being that not only was he in this meeting, he had copied in. So this is why you should always BCC and never CC on emails. He basically copied in the head of the campaign trail. He copied in a few other senior people who are now influential personnel as part of the Trump administration. Obviously problematic, given the fact that highly unlikely then that those people can also say, well, we didn't know anything about it. It's not a kind of valid excuse, I guess, in this technological age. Trump Jr. did appear on Fox News, but we know kind of who pulls the strings on Fox. And he basically said that there was nothing to tell. I'm being transparent. This is what the conversations were. But even when you actually read the own material that he published himself, it is pretty condemning. And what much of the press are picking up at this point is that initially, when questioned, Trump Jr. several months ago, he said it was an introductory meeting, and now what we're seeing, it's a little bit more than that. He was tempted into a meeting on the promise of he'd be given negative insight into what they could use to help boost the campaign. And so he himself has been kind of found wanting in terms of the truth. And it's already started to change his story a couple of times. What does this mean for markets? Well, it's the usual kind of impeachment, I guess it was where this heads to. This was a big market concern a couple of months back. It did cause and create only a very short period, but some of the biggest downside volatility that we'd seen in an otherwise very quiet marketplace. And all this means then is that the more growth positive type policies, those based around fiscal stimulus, just get delayed even further, and hence the reason why you had kind of a negative reaction yesterday. So S&P, US equities lower, consequently then yields fall as this promise of kind of Trumpflation or higher growth in the US dissipates, so probably a slower trajectory from the Fed. So T-notes rally, gold rallied, the yen strengthened, that kind of traditional flight to quality move that was seen yesterday. Where does this go? Well, there was a couple of things here. Quite an interesting FT article. And actually, just before this, something I didn't intentionally mean to do, but if I flick between these two tabs, look at the pictures. Trump, Boris. Trump, Boris. Are they the same person? I'm not sure. They must be brothers or cousins, maybe. Eerily similar looking. And going off what Boris said yesterday, politically, they tend to be making quite similar flip-flopping, I guess, of what they have been saying of late. But looking at why this is important, a couple of question marks here. How much trouble is Donald Trump Jr. in? ultimately, that'll be up to Robert Mueller, who's the special counsel investigating allegations between Trump, that's Team Trump and Russia. What's Trump Jr.'s defense? Well, he's just saying that really it was a short meeting, nothing came of it, so bottom line is he's done nothing wrong. He's also said that he didn't tell his father about the meeting, so therefore there is no connection to the president himself. The most interesting thing about this all, when you talk about nepotism, is one of the analysts in this article says that what happens next? Well, the president's son will have to go to Capitol Hill to explain himself in front of a judiciary committee. But in essence, the president could pardon his own son. He's potentially in a lot of trouble, but after all, his dad is the president of the United States. He's got the ultimate get-out-of-jail-free card. It's what one of the political analysts has commented. I think it's quite a good phrase, but because I guess that's essentially where this could end up going. But yeah, the market doesn't seem to have held on to that move. Not just Trump, but the whole kind of administration, it seems. We've kind of somewhat grown used to the fact that this type of situation arising has become a fairly regular occurrence, and we seem to have, unlike the last time, the negative reaction the market had yesterday is decidedly short-lived, which I think says a lot about really where the market's focus is. You know, the market's focus at this point is on a lot bigger themes, predominantly based around monetary policy tightening, rather than Trump, which we know although Trump Jr. being brought into the fray is new, the overall situation with the Russians is not, and so therefore I'm not sure how much of this is going to really have much longevity to move the market. One of the other things, though, that was a big mover yesterday was the pound. Let's just take a look at that, and then there's an updated article that I've got to go over with you guys quickly this morning. And really, this was the move we had yesterday at 1:30. If you remember, there was Bank of England's Ben Broadbent was scheduled to speak. His speech got delayed. It got pushed back to 1:30. And when he spoke, the pound immediately, so looking at cable, moved quite sharply lower. We were kind of bid up throughout the morning. This was more predominantly led, I'd say, by dollar weakness, because both major pairs, euro, dollar and cable, were trading higher. But obviously a lot of people are now expecting some kind of hawkish hint coming out of Monetary Policy Committee members from the Bank of England. And what actually happened, Broadbent said absolutely nothing on monetary policy. And we immediately shot lower. If anything, we actually read his report, and he did talk about Brexit. He was talking about the quite severe negative read that Brexit will have on the performance of the UK economy going forward, which, you know, if you start to connect the dots, it's kind of suggesting the fact that he sees a weaker economic environment, so probably he'd be sitting on the side of continuing to remain on the camp who prefer to hold interest rates rather than hiking them because of those economic weakening conditions. So the pound moved quite sharply lower, and then this morning, if you look where cable is at the moment, you've had another decent move on the downside with an immediate test down at the S1. We just had a brief touch on fresh session lows here just as I'm speaking. S1's held up thus far, but definitely could come under some pressure today. In terms of the move earlier, when we first came in, this was the headline story, and this is kind of, I guess, 101 central banking comments. A lot of people were looking for him to comment yesterday. He obviously didn't, but then a unscheduled article magically appears in the Wall Street Journal front page the first thing the next morning. So again, central bankers trying to convey this transparency in order to manage market expectations more accurately. So Bank of England's Broadbent, in summary, says not ready to hike rates. And obviously this is a lot more clean cut than what we had yesterday when we had to kind of look at his assessment about impact of Brexit. This is just him outright saying, and don't forget, this is the Deputy Governor of the Bank of England, so should be very closely aligned with Mark Carney. So it's not ready to raise interest rates just yet. Substantially lessening the chances then that borrowing costs will rise soon. He said the mood among businesses was central to his analysis, and that it was very difficult for the bank's MPC to judge whether there has been a significant improvement. In my opinion, it's a bit tricky at the moment to make a decision, i.e. on raising rates. I am not ready to do it yet. So, just as a guideline in terms of monetary policy speak, specifically in the UK, this is something that I used to do a lot and years gone by, is that he was speaking at a conference in Scotland yesterday. So typically what I would do is that I'd identify the specific town of where he was speaking, or where that official would speak, and then I would go through on Google and I'd basically look at for what are all of the regional newspapers for that area, because quite often when they do these trips to some of the bigger cities across Britain, they tend to then have local interviews with the press in attendance. So quite often, for instance, if they speak in Liverpool, not only will you get the initial comment, like we had yesterday, but then you'll have the Liverpool Echo, or typically get exclusive rights to then have an interview with that particular MPC member. What you can do then is sometimes 1 minute past midnight, websites tend to have automated processes which then you can capture the news well ahead of then people like Bloomberg or Reuters, which would then come in the morning. They would go through regional press to then identify stories, if that makes sense. So there is a time arbitrage you can get there on some of these commentaries when these guys do their regional, I guess, speeches. So just for future reference. The reason why, just going back to the chart, I'd say there's a potential for some downside movement or an extension of this decline in cable is because you've had a senior MPC member talking about not ready to hike rates, so sounding more dovish in the context of recent weeks. And we've got Janet Yellen speaking later. Now I'll talk about that a bit more, but overall my thoughts about her speech today is that I think she's just going to stick to the script, so to speak. I don't think she's going to change that. I think she'll, as Deutsche Bank are kind of looking for today as well, for her to reinforce her message from the June FOMC post-press conference to guide the market towards an announcement of the beginning of balance sheet normalization at the September meeting, and then to carry out the rate hike by year end. So if that gets, given the weakness that we had in the dollar yesterday on the back of Trump, potentially then her continuing to follow this normalization communication might result in some dollar strength. This then coming in the context of sterling weakness on the back of this dovish latest commentary. So a divergence, if you like, in the different communication coming out of these opposing central banks, which could weigh on cable. Certainly if we start to break as well some of these technical levels on the downside. So cable to be watched. And just while I'm speaking on cable, let me just go back to that Boris Johnson photo, because the actual story that goes along with that is the fact that the UK has no plan B for Brexit talks if it fails. That's according to Boris Johnson. That's fine, we have heard that before, but the problem is now what he's saying is kind of the opposite of what Brexit Secretary David Davis has said. And so again, you're getting this fractured kind of approach to negotiations from fairly senior officials, which are all supposed to be part of the same team. This is completely, well, not what you would want to be seeing in terms of a united front to go in most strongest hand with negotiations with Europe. This probably has the opposite effect. And so, if anything, I'd say this is more probably for the talks from a conservative point of view, more destabilizing in the near term at least. A couple of other headlines then to have a quick look at. First off, we did mention yesterday you had Fed's Brainard speaking last night. I think it was after 6 p.m. So just to recap, any of you who didn't catch her comments, she said, sees balance sheet reduction as appropriate soon, which will happen over several years. Now, I think this is interesting because if you were trying to kind of garner an idea of the type of tone that's likely to be issued by Janet Yellen later, then you'd probably want to look, when you're deeming how hawkish she might be, is, well, what are the most dovish members of the FOMC thinking at the moment? And Brainard is certainly one of those. She sits much more on the dovish end of the spectrum, and she's started talking about balance sheet reduction as being appropriate. So if that was the case, then all the more reason I think that the Fed as a collective are going to maintain their kind of more hawkish leaning stance going forward. Talking of Janet Yellen, this was something that I picked up in the Politico this morning, and it's talking about Janet Yellen's future, because Janet Yellen, as the chair of the Federal Reserve, her term is due to finish in February of next year. Now, this has kind of gone a bit quiet as a subject matter, I guess, as people have been again sidelined by this whole Russian fiasco with the Trump administration. But ultimately, the changing of the leadership at the Fed at the beginning of next year will be very important, because you've had a person who's been in place for a number of years and has been deemed to be, as far as Trump certainly is concerned, as a person who has kept interest rates low for a considerable period of time. And if you remember, one of Trump's kind of big U-turns that he's done from campaign Trump to presidential Trump is that in the campaign, highly critical of Janet Yellen and her tactics for US policy, wanting to be more pro kind of getting rates off this ground zero, only then to, once becoming president, saying, do you know what, I like Janet Yellen and I like low interest rates. That was his latest line, and unbelievable to see yet another complete U-turn on what he was saying in order to get people kind of on side to what he's actually delivering. But that's kind of, again, what we're used to. So the question is, who is this chap that could replace now Janet Yellen, the one who's being, according to the sources here, tipped as the top guy or top candidate? National Economic Council Director then, so Gary Cohn. And a couple of things here to be aware of. According to sources within the Republican Party, essentially the job is his if he wants it. The question is, does he want it? Ask yourself this. If you were offered possibly the most important job in the world, to govern the biggest economy and most important central bank, that your decision making could alter the trajectory of the economic performance globally, would you want to take that job at a point where you're just about to tighten the balance sheet and you're just commencing a series of interest rate hikes? I would say this is almost a poison chalice taking over this position, because ultimately the job of normalization is going to be a highly stressful one, and a one that is going to be particularly difficult to manage. There's a high risk associated with failure to deliver this normalization process. So, yeah. The other point being as well is that, as I just said, Trump has obviously changed his view of Janet Yellen over the last few months. So Yellen could still stay. That's another point. Another thing, though, going against Mr. Cohn being or taking the top job at the Fed, is that during the financial crisis, if you remember, it took substantial government involvement in order to stabilize the situation, in the case bail out banks and so on and so forth. And so what we've seen is quite a severe political backlash against the financial industry in the years thereafter. Now, don't forget, Gary Cohn, at the time of the financial crisis, was president and COO of Goldman Sachs. So how does that go down with the general populace and all the different congressional members? I'm not so sure. The other thing that's important here as well is that Donald Trump seems to be just employing Goldman Sachs to run the United States of America, which isn't that particularly new, an idea, because during the financial crisis you had a Goldman's guy, Hank Paulson was the head of the Treasury, then you had Blankfein, the head of Goldman's, getting involved with the various financials. It's always been a similar kind of tight network of a very few individuals, but obviously that has negative, I'd say, political read across. A couple of other things though to keep in mind. Janet Yellen, would she want to continue? If you remember, it was 2 weeks ago she was in London. She got rushed to hospital for a urinary tract issue. Not pleasant, but it's the second time she's been taken to hospital in, I think, the last 2 years or so. Trying to think how old she is. She must be coming up to almost 70 years old, so she's not exactly a spring chicken anymore either. And so maybe it's time for her to step aside anyway if her health is to be safeguarded. So there's quite a lot of different angles here to assess. And certainly this is something which isn't particularly big now, but is something which will become a pertinent issue for markets, I'm sure, later on down the road. Okay, quick look at the calendar, and then there's a couple of other things I can talk about as we go through. First off, we have UK data coming out at 9:30, and again, it's not the unemployment rate and claimant count change that's particularly important, because the level of claims and the quite low level of unemployment in the UK is not really so much a concern at this particular point in time. It's more to do with the average earnings. Average earnings obviously is a real troublesome area of trying to manage the UK economy from a Bank of England point of view, because wages are by nowhere rising at the same pace of which the price of goods are rising. And so that continued divergence between those two measures is what's creating this lack of consumer confidence and the ability then for consumers to spend, and ultimately for the economy being service driven to grow. So keep an eye in particular on the average earnings figures at 9:30 for the pound. If we get weak numbers, that could be then a trigger point to have a little push through this support which has been found at S1 so far this morning. Moving further forward, you've got industrial production coming out of Europe at 10 o'clock. Then you've got what will be interesting just ahead of midday is the OPEC monthly oil market report. So assessing then the latest insight as to global demand for crude, but also as well about compliance levels, OPEC and non-OPEC. How has that been going will be something very interesting to monitor. Going into the afternoon, Bank of Canada. Now this is one of the more interesting rate decisions we've had in a long time from Canada, because as you can see here, the median estimate is for a 25 basis point interest rate rise. Now that might sound fairly incremental, but the last time Canada raised interest rates, you'd have to go back to 2010. So we talked about, we had the anniversary just last week or the week before, where the Bank of England is a decade since they've actually moved interest rates higher. The Bank of Canada, not quite so long, but again, it's quite a unique meeting, given it's been several years since we've had rates go up rather than down as we had during the period of 2015. Quite a lot of what I've been hearing on the market commentators from Bloomberg is again talking about this idea of a hawkish, or excuse me, a dovish hike. So that being similar to what we've had from the Fed in both March and June. And I think this is quite a reasonable expectation for most central banks to follow, because what they're trying to do is price enough to the markets to allow them to reposition for the fact they are going to hike rates, so that gets bedded in, but then they follow that up with a generally quite dovish communications in order to manage market expectations as to it's going to be a very slow normalization process. So nothing that's going to disrupt the markets too much. They're going to prefer to go kind of slow and steady. And so I'd be looking out for potentially something similar from the Bank of Canada when they talk later. Then you've got the DOE crude oil inventory numbers. So let's just go back to the crude chart, looking at WTI crude. You can see we've had a big jump overnight. Let me just highlight the specific candle. We rose from around 45.13 all the way up to 45.75. So a decent kind of 60-cent pop on the upside overnight on the release of the API inventory data. What did that data look like? You had a headline drawdown in APIs last night of 8.133 million, the biggest drawdown since September of 2016. Expectations were for a drawdown of around 2.5 million. Again, the drawdown was 8.133 million. Cushing, a drawdown of 2 million, and I must say I've not seen Cushing have a drawdown as big as 2 million in a long time. Well, actually, you can see the statistic there. It's the biggest drawdown since February of 2014. Gasoline, drawdown of 801,000. Distillates, a build of just over 2 million. So overall, in summary, a particularly bullish report, as then reflected in the market price last night, jumping higher. And then I know a couple of the guys in the trading live room already looking to get in long at 45.73 as Europe have come in and reacted to some of this new information released last night, finding a bit of a flaw from the kind of Asia Pacific support level. Had a test on that this morning. I know there's a few guys already in that trade and have scaled out some of the position, but looking for a move through 46 as the market sort of tends to position itself then for likelihood that the DOEs will follow a similar picture in terms of forming a deep drawdown in some of these key inventory numbers. So that's going to be key for oil prices today. If you're looking at that, that will be at the regular time of 3:30 for the crude numbers. Going into the evening, you got Fed's Beige Book, which is the kind of regional breakdown of the individual Fed districts. But I would say on a day like today, I mean, it's not really that important on a regular basis, but on a day when Janet Yellen is delivering her semi-annual testimony, this is a complete non-event for the Beige Book. So Janet Yellen, how is this going to work? Well, I think the timings wise is she's going to be speaking live in front of the House at 3 o'clock. However, the text will be released by the major news agencies, so your likes of Bloomberg and Reuters, at 1:30. So at 1:30, they will already, the news agencies, have the speech which is legally embargoed, but they would have already read through it and identified several key comments that they're going to then snap on the news wires immediately at 1:30. Therefore, you're going to get a lot of volatility at that particular time of day. Key comments, obviously, you're looking for is any further detail around this balance sheet normalization, and particularly what is her assessment about current inflationary conditions, given the communication thus far has been more that the recent dip has been down to transitory factors. Does that still remain to be the case? Or, given what we've had with a lot of these central bankers talking more hawkish of late, does she actually kind of rein that expectation in a little bit? And does she sound kind of more neutral or maybe slightly dovish in order to just kind of balance it out a little bit from the market getting too overtly expectations of the Fed turning hawkish? So the biggest event by far for today is the semi-annual testimony at 1:30. In the interim period, you might get some volatility in the pound coming up shortly in half an hour, particularly technically sitting at S1, having found some support there, but also with the dovish comments from Broadbent overnight. Weak wage data could see a bit of a move lower in cable, so that's to look out for. You've then got the crude, the OPEC monthly meeting, or OPEC monthly market report coming out around midday. That could be very interesting as well, but I would say likelihood there's probably going to be a bias for upside movement in crude, like we've already seen this morning, as the market starts to position itself for potentially a very bullish set of data from the DOE, and then it's about whether or not that lives up to that when it comes out at 3:30. You've then got the Bank of Canada after Yellen as well, which will be a notable event for anyone trading CA6, your CQG ticker for that, for the Canadian dollar. But everything is going to be based around, from a multi-asset market moving point of view, the text. So not when she's speaking live, because that at 3 o'clock we would have already known exactly what she's going to say. It's at 1:30 that's key. She then goes into a Q&A type format with all of the members of the House. They basically have a chance to propose a question to the Fed chair. This tends to go on for several hours, but very rarely does it actually create market moves. The market moves will all occur when that pre-prepared text gets released. Okay, gonna leave it at that. So have a good day. Just keep in mind those particular pivot points, I'd say, of the day timing wise, because unlike Monday and Tuesday, which have been exceptionally quiet, they've been exceptionally quiet for a reason. And that reason is because everyone's waiting for today. You've got US PPI Thursday, US CPI Friday, US retail sales Friday. You've got all the US banks, big banks reporting to kick off earnings season on Friday. Now the week begins in terms of the bigger scheduled events. And so I would be expecting then the next 3 sessions to be a lot more interesting than what we've had the previous 2 days. The best is yet to come. Okay guys, have a good day. See you in the chat room.